Why would anybody ever want to use a hard money loan as a bridge to getting long-term financing? A lot of our borrowers do that. One of the first reasons using the hard money to buy the property to begin with, way easier, less paperwork, you can close quicker. Sometimes there's not even a credit check, less fees involved, etc., right? It makes you competitive when you're going out to buy that property. You also use it as a bridge to that long-term financing because banks live inside their little banker box. They have a set of rules that they have to follow, even if what you're trying to do just makes more sense. That still doesn't fit inside their box. So what I mean by that is a bank is only going to lend you 80% of the purchase price or appraised value, whichever is less. So let's say, for example, you take a $100,000 property and you're able to buy it for 50 grand. If you go straight to the bank, they're going to say, well, your purchase price is 50 grand, so we're going to lend you 80% of that. Well, that's what, $40,000 or whatever that is? Whereas if you go to a hard money lender, they're going to give you the full 50 grand. And what you then do is then go to the bank after you've used the hard money to buy the property. You go to the bank and you say, I want to put this into long-term financing. Back to the banker's box, they only want 80% of the purchase price or appraised value. Well, there's now no longer a purchase price involved. You own the property. So they have to go off appraised value. And in this example is $100,000. So the bank is going to lend you 80. You then pay back your hard money lender the 50 grand plus a little bit of interest. You now own a rental property with none of your own money into it. And in this scenario, you've even taken some money out and you have extra to go buy the next place with. So a couple reasons why, but that's probably the biggest one.